Hi, this is Moy at Global Changer with a tutorial on how to use the new financial KPIs feature in the Climate Control Center. Let's first open an action which has already been filled in the financial KPIs calculator. So here we have an action called install a photovoltaic system, and if we open the budgeting section, we see that in the last tutorial we've already filled the energy KPIs and the CO2 savings using the calculator, and this action has already been filled as well on the financial KPIs side, where you can see the CapEx, OpEx, savings, etc. using this calculator right here. So we will do this in a second step by step, but you can already see that the results have been shown here. Now, this is using the so-called VALERI method, which stands for Valuation of Energy-Related Investments, and it's a standardized methodology to do so, which is planned to be integrated into the EU tools, including also the ISO 50001. It shifts the focus from just looking at the payback period to looking at the lifelong economic viability of a measure, and also uses a method considering several scenarios to make a comprehensive evaluation and find a good decision. Now, again, the first thing we're going to do in the Climate Control Center here is to go into our assessment section and into the calculation data, where we will set some parameters that will be applicable to all of the actions we calculated using this tool. Here in calculation data, we're going to look at two things specifically. First of all, the discount rate, which is usually given by controlling for your company. And we'll set this in this example to 8%, as well as the cost per unit. For example, Electricity Germany, which we'll set to 30 cents per kilowatt hour. And we're happy with the growth rate, basically inflation and growth rate of the price of 3%. Once we're happy with these, we'll go back into our roadmap and start populating the financial KPIs. I have duplicated this action right here, install a photovoltaic system number 2, so that we can have a look at a clean slate and start calculating the financial KPIs step by step using this new calculator right here in the Climate Control Center. So in order to start calculating, I click on this little icon and it opens this window here. As you can see, the discount rate has already been carried over from my calculation data settings. The lifetime of this investment is set as a standard to 10 years, but you can also set it depending on the investment to whichever value makes most sense. So, for example, 15 years for the specific photovoltaic system. Now, the first thing we're going to have to enter is the CapEx, basically capital expenditure, which is any cost that relates to acquiring, upgrading, or maintaining a physical asset like a property, equipment, or infrastructure. In our case, the CapEx is made up of, first of all, the equipment purchase for our photovoltaic system, which amounts to 500,000 euros in this example. And we have a second capital expenditure, which is the installation cost in this example, which we will amount to 50,000 euros. Now that we've populated the CapEx, we'll move on to the OpEx, or operating expenditure, which is anything that is required day to day to run your business, including salaries, utilities, office supplies, but in this specific case, mostly maintenance. So this will be the first thing we add right here, maintenance. And we'll start in year 1 by adding a 2,000 euros yearly maintenance fee, and I'll go on afterwards and populate all of the rest of the cells for the remaining years. But right now we'll move on to the next cost that we have in operating expenditures, which will be an inverter replacement that we will have to do for this photovoltaic system in year 12. And here we have budgeted 10,000 euros for this inverter replacement. So I'm going to year 12 and entering 10,000 euro for this one-time operating expenditure. Now we can move on to savings, and here we will select, we will enter what this is about, and since we are installing a photovoltaic system, we're going to save on energy, and we will choose the source that we're saving on. So here we have already set up in the calculation data field earlier, electricity Germany. And as you can see, it has populated the 30 euros per kilowatt hour that I said earlier, as well as the growth or inflation rate of 3% that we are working with here. Now, the only thing that I have to do is to enter the amount of electricity that we're saving. So starting in year one, we're going to save 250,000 kilowatt hours of electricity on this example. And I will now fast forward and fill in all of the remaining years so that we can have a look at the results of this calculation. So now you can see that I've populated the 15 next years of this calculation, and we can now have a look at the KPIs that are generated by the calculator. First of all, I would like to take a look at the net present value, as this is the most impactful KPI that helps us make a decision in this case. So the advantage of the NPV method is that we get a clear quantitative picture if this investment makes sense. When this value is above zero, it's a good investment to make. And basically this works by looking at all of the future flows, cash flows at today's present value using a discount rate. So it gives us a very clear picture on this investment. So in this case, it's a very good investment. We can also see the total capital expenditure of this action, see the average operating expenditure per year, as well as the average savings per year. We also have the lifetime that we set that we're calculating for, as well as the payback period in years of this investment. And we can see the return on investment, ROI, as well as the internal rate of return. Now that we've done a baseline analysis of this action and we have an idea of how it's performing, we can go ahead and create two more scenarios, a best case and a worst case, to have a VALERI compliant analysis. We can simply do this by duplicating this action, and I'll name this one best case. And I can go down to the budgeting section again and use the financial KPIs calculator, which I access through this button again. And now let's say that the the discount rate has been lowered to 6%, that the price of electricity, purchased electricity, actually has gone up further than we expected to 35 cents a kilowatt hour, and that the price growth has gone to 4%. And as you can see, the net present value every time I made one of these changes increases, as we're looking at a best case scenario right here. To finalize, I click on Use on Action, and now I have my best case scenario calculator right here. So we've now created a baseline scenario as well as a best case scenario together. And I've quickly gone ahead and I've also created a worst case scenario and tagged all three of them as own generation of renewables. Now this next feature is going to help you to quickly summarize this and present this, for example, to an executive committee or a board. You're going to access this by clicking on Insights. And here I'm going to select the company I'm currently working on and search for own generation of renewables. As I've tagged them like this, I can also search for names. And here I'll find all three of them. Install a photovoltaic system 2, which is my baseline, as well as my worst case and my best case. And here I can have an overview of the financial KPIs that I've just created and calculated within a few minutes. We can see the savings per year, the return on investment, and for example here, for the worst case scenario, as the return on investment is negative, we don't have a payback period. Now, this can be really helpful, as I said, to quickly summarize and present this to an audience to make a decision on this action. You have now, within just a few minutes, created a VALERI compliant analysis of an action. And thank you so much for watching this tutorial. We're here to support you on your successful decarbonization journey.